what's going on? And welcome back to Trading Options Network. Today's an interesting day to say the least, but before we go ahead and discuss anything, let's go ahead and get the disclaimer out of the way. Everything we discuss is solely my opinion, not the opinion of Trading Options Network. But of course, too, you have to be sure to like, follow, or subscribe on your favorite social media platform. Let me go ahead and get that slide up. Here we go. Be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with everything that is Trading Options Network. Let's go. All right. So, today is a bank holiday, which is why on Friday I was wondering if the market was going to be open. I looked into it. Of course, we are open today. Hence why I'm here. Of course, there's not much coming out today other than some FOMC members speaking. So let's go ahead and take a look at the S&P map. It is relatively green. I mean, there's really no reason to be red today. Nothing's going on. No information. No financial data is coming out. So there's really no reason to be red. It's just a continuation from the end of last week, in my opinion. So why not go a little bit higher and set new all-time highs again? I mean, that seems to be the trend. Obviously, we're in a bull market, so we should be expecting to see all-time highs coming often. And today is no different. We set a new all-time high today of 585.27. And I'm just going to say one thing. I was talking to some financial advisors that I ran into at a bar. It was like late January, early February. I'm just like, I'm hearing them talk, and I'm like, oh, so what do you guys think of the market? At this point, let's see. Let's go back here. I think it was around 480 or something like that. Right around here. Yeah, 487. Yeah, 470s, 480s. Anyways, yeah, it must have been in January. So I'm asking them, I'm like, hey, what do you guys think of the market? Do you think it will touch 500 this year? And of course, they both looked at me like I had no idea what I was talking about. And I had no, that I wasn't on the same level as them. That's kind of the vibe they gave me, that I was just some guy. And, I told them that, oh yeah, I used to be with JP Morgan and, I trade options for a living now, blah, blah, blah. I told them all that. And again, they just looked at me like I was a nobody and that I didn't know what I was talking about and that I'm an idiot. Like I said, that's kind of the vibe I got. And of course they were like, I know we're at 480 or whatever we were at that time. And they go, I don't see us getting to 500 this year. I don't see us getting to 500 this year. I'm like, really? Yeah, I mean, based on what I'm seeing, I think we're going to hit 500 in the next month or two. And again, that was in January when we were about 480. And boom, in February, what happened? We hit 500. Man, that was the best feeling. Let me tell you something. Don't get me wrong. It's not that I dislike financial advisors, but I definitely dislike financial advisors that think they are the shit. Excuse my language. Because let's be honest, most of them are salespeople and don't know anything about the actual market itself. They are salespeople that are just trying to get you to go ahead and give them money so that they can make money. Okay, financial advisors are not fund managers. They are not fund managers. They do not know anything about technical analysis, or very little, most of them anyways. Okay, same with fundamental analysis. Now, I will be honest, they probably know a little bit more about fundamental analysis than technical analysis. But in the end, most of them do not know anything about the actual market itself. They are salespeople, and they are told what to talk about with their clients. Okay? So, not only have we crossed 500, we might even hit 600 before the end of the year. Now, I didn't predict that. I don't think anybody predicted that, especially after the last year that we had. I mean, this has just been insane. But in the end, okay, I love it. I wish I could just randomly run into them and be like, you guys don't know anything. Anyways, I'll finish that story now. So we are at we hit a new all-time high, a little over 585. What was it? 585.27. Pretty awesome, not going to lie. And we are still going higher, okay? The equal weight is looking even better, honestly. I mean, last week I mentioned the S&P, while it looked bullish, it was more mildly bullish, whereas the equal weight was a little bit more bullish than the actual S&P 500 itself. But again, that just means a lot of these bigger stocks, if I come over here, a lot of these bigger stocks have not exactly been as green as a lot of the other smaller stocks. That's pretty much what the equal weight ETF is showing you. We'll get into, honestly, I'm not really going to do any screening right now. I just kind of want to go into the tip of the day that came out this morning. So this morning, the tip of the day was being able to identify the trends. And I know it sounds so trivial. You know, most people should be able to just look at a chart and say, oh yeah, the stock is going up, or the stock is going down, or the stock is going sideways. I mean, it should be pretty easy. And, you know, we've all heard the term, you know, or the phrase, the trend is your friend. The trend is your friend. We've all heard it before. If you've been trading for a couple of weeks, you've probably heard that phrase. The funny thing is, so many freaking people do not trade with the trend. Everyone thinks they are going to time the market and they're going to, you know, buy puts at the top and buy calls at the bottom. And that when they do that, it's going to magically reverse. And more times than not, it does not happen. So, my tip of the day this morning was I'd be able to identify the trends. And not only be able to identify the trends, but also, yeah, you do have to be able to identify when the trend is reversing. But just because a trend is reversing or appears to be reversing does not mean you need to go all in on a reversal position. Okay, it doesn't. It really doesn't. Truth is, most reversals actually take time. So even if it was reversing, you're going to get crushed anyways because it's going to take time to truly reverse and you're going to get theta crushed. But again, identifying the trend. The trend is your friend, okay? For myself, again, and if you've been with me for, you know, just, I guess I started this last week, I decided I wanted to go through my personal trading plan and pull little things out here and there, and that's how I was doing the tips of the day and everything. So this morning, again, it was the trend is your friend. Here's how I identified an uptrend, a downtrend, and a neutral trend, or a stock that's moving sideways. So stock price is over both the 20 and 50-day simple moving average. Okay, the 20-day is over the 50-day. The 20-day and the 50-day both in an uptrend, higher highs and higher lows. Okay. In fact, the equal weight ETF is a perfect representation of that. This purple line is essentially a line that is representing the higher highs. This blue line right here is the higher lows. We can see the higher highs and the higher lows. Here's another one. This one's significantly higher lows. Okay. And then an increasing MACD and the histogram. Okay. Now, does it have to be every single one of these things? No, but if I would say 3 out of those 5 are legit, then I would say it's probably an uptrend, or at least a mildly uptrend. Okay. 4 or 5 of them, yeah, then for sure, obviously, we're going to be in an uptrend if, you know, all 5 of them are checked off. Downtrend, basically the opposite of an uptrend. The stock price is below both the 20 and the 50-day simple moving average. The 20-day is below the 50-day. The 20-day and the 50-day are in a downtrend, lower highs and lower lows, and a decreasing MACD in the histogram. So, again, if I were to turn this literally upside down, it would be exactly what I'm looking at in terms of stocks that are in a downtrend. Now, what about stocks that are moving sideways? Well, honestly, if I go ahead and take away, just kind of take away, all right, this is the S&P. If I take away what has happened in the last month or so, this would be pretty close to what is in a neutral chart. Sorry, couldn't spit it out. Got a text message and I got distracted. But anyways, so what are we looking at here? Well, notice we didn't have higher highs. We had, the same highs. It was testing a level of resistance, okay? On the flip side, we did have higher lows, okay? I'll be honest with you. We did have higher lows there. And of course, we did end up going more into a bullish trend. However, prior to that, right here, you could argue that these were lower lows, okay? So we had lower lows and higher lows in the matter of a little bit. We also had, again, we were fighting the resistance a little bit there multiple times. So if I go over here, repeat bounces on support and or resistance. Okay, the stock price is between the 20 and the 50-day. Let's go back and take a look at that really quick. So here's the 20-day is this grayish line. The 50-day, honestly, the 50-day, we were kind of above it and then below it, and then above it and then below it. So yeah, we were moving between them for sure. Okay, 20 and 50-day have opposite slopes, and the 20 and 50-day have multiple crosses. Let's see, yeah, I mean, we're both going up, 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 and then the 20 here starts moving down while the 50 is still kind of moving up. I mean, it didn't last very long. Don't get me wrong. I would not have ever gotten into a neutral position in the S&P at this time. I would not have, because there was a lot of volatility. I'm just trying to show this as, an example of what a neutral market. If I stretch this out a little bit more, it even looks even more of a neutral chart. But again, just trying to give you examples. So identifying the trend is very, very important. So many people, again, they want to buy calls in a mildly bullish or a neutral position. Same with puts. That'll be mildly bearish or a neutral position. They're buying puts like crazy. I see people buy calls on in a downtrend, and I see people buy puts in an uptrend because they think they're going to time the market, and they're going to time the tops, and they're going to time the bottoms, and it's stupid. You shouldn't be doing that. The trend is your friend, okay? You have to live by that. The trend is your friend. More times than not, again, the trend will continue moving forward, okay? Now, I will be honest with you, okay? If we go ahead and take a look at UDR, UDR was a stock that I said, hey, this stock has been getting crushed. It is going down. I don't see any reason why it should not be going down anymore. Okay, why it won't continue to move down. And the funny thing is, we bought on this day when it got absolutely destroyed, when it really bounced hard off of that 50-day. I was like, yeah, it's definitely going down more. So that's when we opened up our position. It triggered a position for us to open up on that day. Funny thing is since then it's gone nothing but gone up, or done nothing but gone up. But I did, since being that we did short it, because the bid-ask spreads, if we go ahead and look over here in UDR, these bid-ask spreads are just stupid. I'm not going to be opening a position that has a bid-ask spread of 0 and 480, or in the case of the puts, 0, also 0 and 480, coincidentally. They're just not liquid enough for me. But I did love this chart, so I wanted to go ahead and open up a position. So we shorted it. We shorted it, but we did also open up a trail stop of $1. Now, it did get kind of close. Let's see. The trail stop itself is currently sitting at 44.38, and the high today was 44.21. So we were 17 cents away from having it triggered, meaning it has gone up 83 cents from its lows from when I had opened it. Okay. Now, the great thing about this chart is, and I did $1 because I thought it would give me enough time, or enough space, I should say, to where it could potentially move up. But if it goes up $1, then I'm probably going to want to get out of it, because it probably is going to end up going up higher. But as of right now, again, it's getting rejected by the 50-day again. It tried to move forward, tried to move higher than it, but since then it has moved down. It looks like the market actually closed a few minutes ago, so we ended at 43.94, so significantly lower than the high. And then let's see. Let me just pull it up over here really quick. We don't need two screeners here. I'll just pull it up right here. UDR. All right. So, and in the aftermarket it is down 13 cents as well. So, I would not be surprised again if it does start moving down. Oops, wrong button. All right, there we go. Let's pull this back up. All right. So again, obviously we want this to continue moving down, but it does have a $1 trail stop. So the most we can lose on this trade is essentially $1,500, which would be only 0.5% of our portfolio. So I'm not too worried about it if it does trigger. And, it's just one of those that does not go our way. Again, the trend is your friend. Sometimes it just doesn't work. If it does go higher tomorrow and we get stopped out, then it is what it is. And who knows, maybe it'll go up to the 20-day and then it'll bounce off the 20-day and we'll put it back on our watch list and maybe, short it again later. Maybe it was just bad timing for us or it wanted to rally a little bit, especially with the market being as green as it is. I'm not worried about it at all. Let's go ahead and take a look at our positions. Good old How I Met Your Mother. How I Met got kind of hurt a little bit today. Let's go ahead and take a look at that one. Okay, so let's go ahead and zoom in a bit. All right, so still towards the top. I mean, it's kind of a red day. There's no doubt about it. But how many days do we have until it expires? We have 32 days. It's a 100, 110 vertical spread. So honestly, I'm not even worried about it getting all the way up to 110. The reason I picked 110 is because I think it could potentially get there. But as long as we're over 105, I'll be happy. Okay, not worried about that one at all. Let's see. MasterCard did somewhat nicely for us. It's 280. It was a 500, 505 diagonal spread, and I think we're over 505 right now. Oops. There we go. 506.66. So pretty good as long as it is right around here. Obviously best case scenario is it finishes on Friday at around 505. So we actually gave ourselves a little bit of space. If it goes up anymore, we're going to actually, we're not going to be as profitable as if it ends at 505. But again, it's still looking nice, still looking really good. And again, we can actually afford a little bit of a pullback and actually be even more profitable. So we're in a good position right now. If it stays where it's at, we're going to be more profitable. If it goes down a little bit, we're going to be more profitable. Heck, it could probably even go up just a little bit more, and we'll probably even be more profitable. So MasterCard's looking great for us right now. Philip Morris is, potentially wanting to move higher. Okay. Now, the reason, of course, last week the short legs expired. It was a diagonal, and I opted to not go ahead and turn it into create another diagonal. I wanted straight puts on it right now, only because the 20-day has now crossed the 50-day. That is a big, big red flag for a lot of traders and financial institutions. Now, I'm not saying it is going to end up causing this to crash or anything like that. I mean, look what happened last time it crossed. Okay, not much. It actually went right back above it. However, this has been a pretty harsh pullback. So I think it can still go down a little bit further. Heck, I'm keep going back and back and back. I can't go, well, let me go back any further than that. But again, I think there's no reason this does not move down a little bit more. It is having a really hard time with the resistance right above it right now. So I still like this position. I know it doesn't look good right here, but again, you got to remember it's only down 1% of its of the total portfolio, and that's just this. If we add in the $2,000 we made on the short legs, we're only down 1/3%, okay, of our portfolio. So again, not worried at all. TDS, Telephone and Data Systems. This is another one. Oops, let's close that one. That again looks really good today. It looks actually really good today. And I kept saying we're at a do or die position with TDS, and it looks like we are in the doing phase. Okay, it's looking nice. It obviously has really rallied off of the bottom here. And now we just want it to break out. Okay, so I like where this one's looking. UDR Inc. If we look at this chart really quick. Oh, we already did. That's right. I'm sorry. And then finally, the last one was Exxon Mobil, which we are up 252 on right now. It is another diagonal spread. We have 11 days till the shorts expire. But if I pull up this chart, again, it looked good today. And I think it's going to continue moving higher. I think it does. Especially with where the energy sector is looking. The energy sector looks great right now too. So I'm liking all the positions. Today we were, we were down $300. Okay, 0.1% of our portfolio. It's not a big deal. It could very, very easily be made up tomorrow. Overall, again, I like where we are at. Even though it does say our profit and loss on our positions right now is, a little daunting, $5,500 red right now. Mainly a lot of it is that Philip Morris trade, which in all reality isn't as bad as it looks because, again, we're really only down 1,000 here, not 3,000 here. So we can take 2,000 off of that just from there. But again, overall, I like where the positions are. I do. We don't really have anything on our watch list with the exception of Cisco. So let's go ahead and take a look at that one really quick. Let's see, that one's the red one. So boom, boom. Here we go. Maximize this one. Oop, forgot we weren't on. There we go. All right. So Cisco rejected off the 20. Again, the 20 did previously move across the 50 here. This one is in the same sector as is it UDR, I believe. Yeah, UDR. Same sector as UDR. And very, very similar chart pattern as well. Okay. Rejecting off the 20-day. The 20-day has recently crossed the 50-day. I think this one can go down and, get closer to that $70 price point. But I want to see confirmation before I open up another position in this sector in terms of a bearish position anyways, because overall the market is still in a bullish market. Okay, so if this one does start reversing, if we get an engulfing candle tomorrow or a doji tomorrow, it's going to definitely be opening my eyes a little bit wider. But again, we just kind of have to be patient right now and see what happens. So hope you learned something. That's really all I have for you guys today. That being said, keep learning, keep getting better. Let's make some money, and let's have a great week. Take care, guys.